Arnie, I want to start off with you. What was your raw reaction when you found out we got included?
Can I say, wow?
Yeah, but you can say a lot more than that.
Wow.
Me and Matt definitely yelled on stream this morning. So
now, we discussed this for so long. It is almost a year that we have been talking, hey, Palantir is now eligible. Theoretically, it could actually join the S&P 500. And every time, every 3 months, it's like, come on, let's go. And finally, it happened. Now, we discussed a lot about what could happen from this, what are the implications, but the bottom line is what really matters is the perception of, okay, this is a serious company. This becomes, by definition, one of the key 500 companies to track in the the global markets, and that has a very powerful signal. Now, we should not expect everything now to whoa, because as we can share later, there is also a dark side of the inclusion. But so far, it's like, let's fucking go. But I'm really wondering if this stuff of once you are in, the volatility reduces is actually truth or not, because it is since last year that or even before, when Tesla was supposed to enter, I heard a lot of, once it will be in the S&P 500, then you will have more institutional buyers, they're more patient, the stock will calm down a little bit. But if I look at the actual examples, it seems like it's not really the case. And in some cases, it seems like it made the volatility worse. I have some charts that we can see for a reference if we want to, but maybe let's share previously what you want.
Yeah, I was just going to say right here, the top 10 holdings: Apple, Microsoft, Nvidia, Amazon, Meta, Google, Berkshire, the other Google, and then Eli Lilly. So you've got these 10 companies that make up the majority of the S&P 500. They have the highest weighting. Palantir, I think, will be in the I think Steve was doing the math, like it'll be in the 22nd percentile of the S&P 500, something like that, given it's worth 70
like
billion.
like 170 or something like that. I forget what it was. It was in the between 100 and 200.
So it's going to have a significant weighting, even if it's not weighting like Apple or Nvidia. So then the question just becomes what the implication we think will be on, I guess, the stock. Go ahead, Arnie.
Let me point to something. Significant weighting means, as Matt mentioned, something between the 100, 150 ranking out of 500, but the real weight means is like 0.15. So at most, it's like 0.20. So just to confine expectations, is not that Palantir enters and then boom, it moves the S&P 500. I think it is more likely the two key points when we talk about the S&P 500, excluding the real implications for the business, but just stock-wise, I think the two sides that investors expect are, we will keep going higher. And the second one is, the volatility will actually reduce. And I made this simple experiment just while I was waiting to have a line when the last stocks that entered the S&P 500 were announced to enter the S&P, and what happened to the stock price. So now they're not really in order because I was not very organized in this work, but we can see like Airbnb, it was last year when it entered, and then so it had a nice bump at the beginning, then up and down. The volatility was more or less the same as before, and now is down. Blackstone entered the similar period. It had a very nice success. So now Blackstone is one of those cases where the S&P 500 created an initial bump, went down, and then it continued on its own way. KKR just entered, early to say, but here we see the unusual bump. Like what seems the hypothesis is like Palantir, when you get announced, you have a nice boom, and then the stock has its own direction. confirmed by GoDaddy, which was announced. In this case, a very little bump, probably because nobody knew about what GoDaddy was. And now it continued its way. But the most interesting cases here, I think, are the last inclusions, CrowdStrike and Supermicrocomputer, which we could say even almost stole the place for Palantir because they had the same conditions. But no. Let's include Supermicrocomputer. Boom, like a crazy bump at the beginning. It was like 15%, 20% bump since the announcement, and then completely sucked since.
It's fell 60% since. Yeah.
So I got a question for you guys. We're talking about the volatility, whether it's less volatile now that being in the S&P 500. I would say, to Arnie's point, it's going to be just as volatile as before, maybe even more because there's more money flowing in. For the simple fact that really you can equate volatility to the majority of the market not understanding a company. When you look at NVIDIA, most shareholders still don't understand that it's a software company. Mm. When you look at Airbnb, they think of it as a hotel company. They don't think of it as a software company. You look at Tesla, they think of it as a car company. You sure as heck know they're not going to do a lot of research to figure out what Palantir is. They're going to just say AI company.
Yeah.
And so I think when you look at volatility, and you could have volatility with great fundamentals, gives great opportunity if they have a good, fundamental balance sheet and growth.
So the question is, will Palantir be more understood, or maybe the opposite?
I don't know. I don't know if people, you would think with all the money that poured into NVIDIA, do people really understand? It's pulled all the way back to 102. There's no rhyme or reason. They smashed earnings beyond belief, but we're just going through a cyclical change, right? We're going through a tech change. And the only reason Palantir wasn't read today was because they showed, we now are in the S&P 500. So I don't know. I think that we're still going to have good, in a positive light, we're going to still have really good buying opportunities eventually. They may be fewer and far between, but when they happen, we got to jump on it.
Yeah, I think that's fair. The CrowdStrike and SMCI example Arnie brings up is really important because the whole point, theoretically, of getting into the index is to be less volatile because thousands and thousands of fund managers own the stock, and they're not going to just immediately sell it off if there's some bad news. They want to have a long-term horizon. The whole point of the S&P 500 is to own it kind of forever, right? You're betting on America. You're betting on American innovation forever. But that's the opposite. Airbnb, very volatile. Tesla, it's been 4 years. Stock's been kind of dead, up and down, up and down. CrowdStrike down 60%. SMCI, they delayed their 10K form, down 30% in a week. So it is a good thought experiment because the volatility probably is not going to decrease. But that also means the volatility to the upside, if the company actually executes against their mission, which what NVIDIA, Amazon, Google, Apple has done over the past 10 years, it might take it to, in an extent that we haven't really thought of, if they can keep executing.
I think that's why it's so important that I really wish I knew this 2 years ago. It was the first time going through a serious plunge, right? Remember 2020, 2021, we got super euphoric results with stocks that were just like stupid valuations. Like Cloudflare pushed like 220 at one point or something like that. Just crazy. And for those who don't have a flawless balance sheet or tons of cash on debt or cash on hand and no debt, coming interest rate hikes and macroeconomics and world changing macroeconomics that could happen for 2, 3, even a full presidency term. It's those who can withstand that then come out better in the end, I think, with the volatility.
Arnie, go ahead.
No, well, personally, I don't complain of volatility. Actually, I'm only happy of volatility because once you know what you want, having a lot of volatility is just multiplying the opportunity both on the upside and on the downside. You just need to be more mentally calm. But if you think of it, like already a plus 7% in a day is like annualized something that has no sense. Okay, I was thinking something that I think is underestimated right now. Like consider that we got a 7-8% bump on a day where the entire market was complete shit. Now, if we think that Palantir has a very high beta, this makes me think that if the market were red, were very green, like plus 2%, we would have had like a crazy bump, like CrowdStrike, Supermicrocomputer, which touched plus 15-20%. So that's potentially the case if the market flips on Monday.
Arnie, how do you think the founders feel about this?
I think they're not really pumped for this stock because, okay, like that has a massive impact on their wealth, but I think it is a sense of realization. When you know you're valuable, you initially, the fact that people don't perceive you as valuable is what triggers you. But at the end of the day, you want to have some recognition, especially as you evolve, that you are making a good job. Now, this recognition is coming in different forms, like showing net income is also a reason to be proud, because it means clients pay you enough for you to say, oh, I'm profitable. That comes from the recognitions we got just last week. Forrester saying Palantir is the #1 company in AI machine learning platform. Now, we can agree on certain things or not, but that's a very important recognition. And this recognition of Palantir being included in the top 500 companies is like, okay, we are officially among the big companies that make the history of America, and by definition, also we change the the direction of the world stock market and also of the economy. And I would say there are some secondary implications that I think could be very interesting to follow, because for instance, if you shared just for a second my screen, I found very peculiar this. Sham last week participated at Y Combinator, the most important startup incubator in Silicon Valley, of which we know that Gary Tan is one of the early employees, is now the president and CEO. It was like an option there that they were craving to execute, because once you have this strong connection, it's like, okay, why we don't see more mix of, we don't see more influence of Palantir somehow into Y Combinator. And I think at this time, we see Palantir really went trying to, okay, we are confident that now we can spread. Let's pump on our spread around, and becoming a company that presents at Y Combinator, now backed by the fact, oh, we are also an S&P 500 company, automatically puts Palantir in the same league of other big guys like Salesforce, ServiceNow. So I think from the founder perspective, this is what really matters. Like, we grind our back for 20 years, and now finally we are recognized not as the underdog company, but we are the big guys now.
I agree. I think they fought and clawed. I mean, the interesting thing is we as shareholders feel we were fighting for like respect, that no Palantir matters, but it always puts in perspective. The founders and the early employees were fighting for a decade plus to get the market to take them seriously, to prove that they had a real business. They failed many times trying to scale their commercial product, government product, and then they figured it out. They DPO'd. They did it the way Wall Street didn't want them to do it. AIP boot camps, that's not traditionally how you sell SaaS. They came up with a whole different way of selling, and Dom knows a lot about selling SaaS because he's been in this business, and they're accelerating growth, or re-accelerating. And it's a special thing to see them